Hello everyone, thanks very much for joining us. My name is Nicholas Reid from Reid Corporate, and it's a great pleasure to welcome you to this special investor webinar with Hammer Metals, ASX ticker code HMX. With a market capitalisation of just $31 million, Hammer represents a unique offering in the junior exploration sector. The company is underpinned by a large existing copper equivalent resource base in Queensland's world-class Mount Isa region. It's unveiled a number of recent, exciting new copper discoveries, and it's ideally positioned to play a role in any future consolidation in this Tier 1 mining district. Plus, it's about to start drilling for lithium and gold in WA, just 40 kilometres from the giant Kathleen Valley lithium deposit. To tell us about this fascinating investment proposition, I'm pleased to welcome Hammer's Managing Director, Dan Thomas, who joins me in the Perth office this morning. I worked with Dan for many years at Sandfire Resources, and it's great to see him leading the charge with another very promising up-and-coming copper company. Before we begin, if you have any questions, please remember to log them using the Q&A tab on your browser. I will put any questions that we receive to Dan once he's finished presenting, and I'm sure he's looking forward to answering them. So without any further ado, Dan, thanks very much for joining us this morning. Please run us through the Hammer story.
Thanks, Nicholas, and thanks to the Reid Corporate team for enabling this event today. Thanks to those tuning in. I appreciate your time is precious and appreciate the time you've taken out of your busy schedules to listen to me talk about our projects, our portfolio, and our upcoming plans for exploration in the Mount Isa region. I think this cover slide is quite fitting. It's dawn at Kelman, and whilst Kelman has been a deposit that's been around for some time, I think the inevitable rising copper prices that we're facing with the electrification in the world that we're continuing towards, and the exciting developments in the Mount Isa region, I think shed new light on this project and the opportunities that it affords our shareholders and future shareholders. I'll let you read our disclaimer, which is available on our website at your own convenience. In terms of the Hammer background and the Hammer story, really the Hammer projects were set up and acquired in a very similar manner to Gold Road's Gruyere project by the same founding director of the Gold Road company. Russell Davis has built a package in the Mount Isa region, some 3,000 square kilometres of tenure, prime exploration district, and within that tenure there's some resources there currently of some 530,000 tonnes of contained copper equivalent metal. That portfolio is built around large fault structures in prime underexplored ground in the Mount Isa region, and the copper discoveries that ourselves and our neighbours have been making in recent times is proof of that exploration potential. Never to be forgotten, our projects in Western Australia, gold and lithium, we're looking forward to returning there in the coming weeks, where we'll have a drill rig turning up to site next week and commencing exploration on what I think is an emerging lithium and gold story. Let me take you through a little bit of the background of the company and our current situation. It's worth noting that currently the directors hold 6% of the company, with the recent retirement of Ziggy Libanecki from the board, who holds approximately 8%. Together, the directors, close directors, can hold 14% of the company, with a number of other familiar faces in the top 20 holding just over 50% of the register. Our share price performance, you'll see there over the 12 months, there's no hiding from the current situation. I think we've seen equity markets across the board decline, but I think that offers an opportunity for people to buy into opportunities such as ours with established resource base and clear exploration potential moving forward. It's worth noting our cash position there of $1.8 million is reported as at 31 December. I'll note that there's some $400,000 in receivables there from the Mount Isa East joint venture, where we were drilling in December. The additional thing to note there is we're expecting an R&D tax refund in the coming weeks that last year contributed $1.1 million in additional funding for the company. I'll also draw your attention to this time last year and have a look at the share price and where it sat around February last year. We didn't raise any new capital through until May, yet we still achieved a tremendous uplift in our share price through the March and April period last year. We're looking to deliver similar news flow to this time last year and look forward to exploring the current programs we have to hand. Very experienced team, board management and exploration. We've all been involved in companies that have created serious wealth for our investors before. We're firmly in line with our shareholder base and look forward to participating in the journey with all of you. 2023, whilst the share price graph that I just showed looked not great, was one of the better years that Hammer had. We had substantial news flow last year. We delivered a 40% increase in the mineral inventory at Kelman, and we saw effectively no appreciation in the growth of the company, despite having something that can be valued by people out there. In terms of our exploration last year, we delivered 3 new prospects with mineral intersections of greater than 50 metres at greater than 1% copper. It's rare to find a company that can deliver one of these at one prospect, let alone 3 separate prospects in close proximity to an existing significant mineral resource. I'll talk a little bit more about Kelman and the opportunities that the Kelman project present, but in my view, it is a jewel in our crown. It is our most significant asset in the region, and in a mid-tier company would be well on the path to completing studies and eventual development. Where we sit in Mount Isa, we're surrounded by Tier 1 projects. The Tier 1 projects are familiar to those across the resources industry. South 32 at Cannington, Glencore with the large Mount Isa copper mine, with their large zinc mine at George Fisher, the Cannington mine, the Century mine, which was a world-class lead zinc deposit to the north, Dugald River, a large-scale zinc lead mine up there just to the north of us. Ernest Henry, a large-scale IOCG system, typifies the type of target that we're exploring in this region. More recently, in and around us, Carnaby Resources have made a number of exciting discoveries for copper and gold, and we hold great tenure in and around those particular prospects. In terms of our strategy is to find large copper deposits, find additional copper deposits, and eventually take them through to development and production. I guess one of the questions I get asked a lot is, how are you going about that and what are you doing about it? It's easy for me to sit here and say that Kelman is a project that should be developed. We approach it in a similar manner. However, the capital constraints that we have as a company and the large exploration tenure that we have ultimately means we focus on exploration and delivering value for our shareholders through exploration success. To take Kelman through a pre-feasibility study might entail approximately $10 million in spending. Our next $10 million that we bring into the company at our current levels, is best spent on delivering exploration success, and that's what we're firmly focused on. We focus predominantly in and around Kelman, so we limit ourselves to around 20 to 30 kilometres away from the central deposit, all with a view that eventually one day that mineralisation will be fed through a central processing facility. I'll talk a little bit more about Kelman and what the Kelman project looks like, but there are some numbers and some metrics that I think can be used as a comparison to what our portfolio can and should be worth. In terms of an enterprise value per pound of copper that we have in the ground, currently we trade at around 2.3 cents per pound of copper equivalent metal. I note a neighbouring mine, AIC Mines up in North Queensland, effectively delivered their latest resource upgrade at a cost of 2.3 cents per pound. Our average Aussie peers trade at around 5 cents per pound of copper equivalent metal. So purely on a resource valuation perspective, we trade at a discount to our peers. In the region, you'll find valuations up in around the double-digit cents per pound of copper. So from a pure asset value perspective, I think there is an opportunity with our projects that we have at hand. In terms of Kelman and our cornerstone asset at Kelman, it is a unique mix of copper, gold, molybdenum and rhenium. One of the key points of this deposit and what differentiates it from some of the others in the immediate surrounds is the fact that it contains 4 lenses of mineralisation. Why is that important? Well, it effectively widens your mining width and your effective mining width through a project such as Kelman. It allows a large amount of the resource to come into an open pit mining scenario. One of the numbers when we updated our Kelman resource in May last year that we focused heavily on was the open pit material at Kelman. So some 27.7 million tonnes at 1.1% copper equivalent. I look at this number pretty intensely, and it's one of the numbers that I focus on, and my experience tells me globally what you need to be looking for is mines that can produce approximately 30,000 tonnes of copper per annum for a decade. That can justify your capital expenditure in setting up an operation such as this. That open pit material, especially at a grade of 1.1%, is very similar in nature to the Mod T3 deposit in Botswana that was acquired by Sandfire Resources when I worked there in 2019. And that project had approximately 32 million tonnes in reserve at a grade just below 1.1% copper equivalent. So in terms of project size, Kelman is the same size as that acquisition. Kelman has a slightly higher grade and it has an identical strip ratio to the project. So the economics around a future study at Kelman, I can't see them being dissimilar to something such as that T3 project. In terms of the upside at Kelman, it's certainly open at depth and there are some spectacular grades at depth. I'd encourage investors to look at the high-grade portions of Kelman, 10 million tonnes at nearly 2% copper equivalent, and compare that to other projects that they could currently be invested in. I think the Kelman project represents excellent exploration potential along strike. I think it's been lightly explored in its history, and I think that offers the company some immediate targets to pursue. Not only that, Kelman has become a critical mineral development opportunity. In a landscape where there are a limited number of critical mineral projects in Australia, Kelman stands out from a molybdenum perspective. Molybdenum was added to the critical minerals list by the Australian government in December last year, and I think that gives it some attention that it hasn't previously had. One of the comments that I've heard around the market and looking at junior stocks is, why don't you go out and find a uranium project? And in jest, I've suggested that we've already got our own uranium equivalent project. I've shown there the graph of the prices of molybdenum and how they've behaved in the last 3.5 years relative to the uranium price. And it's only in the last month that the prices on an equivalent basis have swung in uranium's favour. I think the aspect of molybdenum and its favourable economics have been missed by the market and represent an opportunity for investors. A lot of people can't pronounce the word molybdenum, let alone understand what it's being used for and how it's being used. It is a widely used metal and it has a number of traditional applications, predominantly in high-grade stainless steel and in particular in the oil and gas industry. Moving forward, it's going to play a critical part in our world, in the world's move to electrification. And it has, being a high-grade alloy within stainless steel, has a broad application, and it's used in wind turbines, in nuclear fuel plants and the turbines in there, and in the emerging gas industry. Shows that there is a good path forward for molybdenum. The overall market size is around 270,000 tonnes per annum. So in terms of its overall place, it's very similar to a metal such as cobalt. Its economics look slightly different though, and more in line with what you'd expect out of copper deposits. Most molybdenum is mined out of copper deposits through South, North America and China. We all know the thematics around copper: declining grades, declining production, no new discoveries, and ultimately with an increase in demand, the lack of future supply represents a strong pathway forward for the metal. Last year we saw tremendous price spikes in excess of $100,000 a tonne. And Kelman sits as an undeveloped molybdenum project. It's one of the highest grade undeveloped projects in the world. What are our priorities for the upcoming year? We have 6 fronts that we're actively exploring and how we think we're going to deliver significant growth for our share price. Our prospect at Hardway, where we've now delineated some 1 kilometre in strike extent of copper and rare earth mineralisation there. It's all in oxide at the moment, and we haven't found any deeper source for the sulfide material there just yet. Our drilling has been limited to shallow depths, again looking for maximum economics early on. This year we'll turn our attention to looking for that sulfide source with some deeper RC drilling and some diamond drilling there on 2 key target areas. We continue to explore for large-scale IOCG prospects. The Bullrush prospect, we're looking to get drill tested this year, and it is mature and ready to be tested. It's just north of the Carnaby Rio Tinto Devoncourt IOCG target there. We're quite excited by that particular prospect. We have been looking for some joint venture partners at that particular project, and we'll continue those discussions in the coming weeks and months ahead. Our joint venture partners I haven't touched on yet, Sumitomo Metal Mining and Glencore. These are serious large-scale copper producers with a view that this region can deliver large-scale mining opportunities. We continue to await for some results from the drilling in December, whilst we also plan for our upcoming drilling program at targets to the south of Secret. Again, a significant scale IOCG target. Our exploration in and around the South Hope or Mount Hope region will continue. The high-grade discoveries last year at Mount Hope South or South Hope and also Mascot offer tremendous growth opportunities for the company and continued exploration success in the coming year. Our Yandal projects start, as I said, next week. They were due to commence tomorrow. Some rain through the past couple of weeks has held up the rig's arrival. We look forward to those projects commencing and finally drill testing our targets, our lithium and gold targets there. I'll talk more to that as well. And in and around Kelman, I've touched on the tremendous opportunities that are near field there. Hardway, I spoke last year, predominantly intersections there over a key stretch of some 600 metres. 30 to 50 metre wide intercepts of copper and rare earth, the copper grades ranging from 0.7 to 1% copper. I did mention some options there. Hardway's a former silica flux mine supplying smelters. So it does offer an alternate pathway for potential commercialisation in selling the silica flux material, which incorporates the copper to a copper smelter. So we're looking at some of those options as we also assess the potential for JORC resource around the existing drilling at this particular target, in addition to drilling those deep sulphide targets that I mentioned there last year. This system geologically is very unique for the area. The high degree of weathering through the area and through this particular deposit is encouraging from a largest target perspective. And we see some really different mineralogy through this deposit with rare earth mineralisation, some significant grades of cobalt in part, and some significant levels of manganese. The overall mineralising fluid through here presents an interesting target for us at depth. We'll be looking to drill the Hardway target towards the end of or the middle of March. Bullrush, in terms of this particular target, I haven't had an opportunity to present this formally until now. The Bullrush targets, you can see there the Rio Tinto Carnaby targets there, the discrete magnetic and gravity anomalies that have been pursued there and pursued with a technical success to date, offers us some great encouragement for our more distinct magnetic and gravity features on the perimeter of that large intrusion that you can see there. We'll be looking forward to getting out there and drill testing this target, which we think has high prospectivity. The interesting aspect of this is it sits below around 50 to 250 metres of cover, so effectively would be a blind discovery and a target that hasn't been tested by Hammer. In and around the Mount Hope region, you can see there our dominant land holding in and around Carnaby's Mount Hope projects there. In particular, we've focused here at Mount Mascot and also the South Hope prospect and the Stubby, all with significant intersections of high-grade copper and gold mineralisation. As I said, we hold a dominant position in and around the deposit. We're looking forward to seeing there was a fly-in that hasn't come through on this version, being a PDF. But I would encourage you to have a look at our land position in and around the tenure that Carnaby hold here. Their deposits are very close to the boundary. And I'm sure one of the questions that I'll be asked will be why we haven't drilled in along that boundary, and I can address that in some detail towards the end of this presentation. The Yandal Gold Project in Western Australia, a region that's produced some 24 million ounces of gold. Our targets here are twofold. Gold mineralisation, which we successfully defined through 2020 and 2021, in addition to some highly prospective lithium targets that we've generated here. In terms of a setting, we're on the other side of the Kathleen Valley granite, some 40 kilometres away from Liontown's Kathleen Valley lithium deposit. That same granite system feeds the pegmatites at Kathleen Valley, feeds the pegmatites that we see at North Aurelia, and we're looking forward to drill testing that later this month. In terms of the gold and lithium prospectivity through here, all of the dots you can see through here represent the bottom of hole lithium gold drilling that we've done here through 2021 and 2022. The only samples that we took through this region in terms of multi-element geochemistry was the bottom of hole samples that we took from the gold drilling, and the pegmatite swarms that we've identified to the west of that particular drilling provide encouragement that we are operating in an LCT style, highly fractionated granite. The bottom of hole lithium response is anywhere between 50 to 300 ppm lithium. With its proximity to those pegmatites, we're highly encouraged. Why haven't we necessarily seen the pegmatite? Well, we have seen pegmatites in our drilling. Why haven't we drilled through the pegmatite units? All of the geology units in this area run north-south. All of our drilling has been orientated east-west. Those pegmatite units also run east-west. So all of our drilling in this area historically has drilled parallel to these pegmatite units. We'll drill test underneath the pegmatites so we can see outcropping. We'll also drill test underneath the former gold drilling, targeting those pegmatites in the upcoming program. In terms of the gold results through here, this is something else our investors should keep an eye on. Our programs through here delivered significant intersections a couple of years ago with intersections over a 2 kilometre stretch, ranging from 8 metres at 4 grams per tonne, 14 metres at 1.8, and some higher grade results, 4 metres at almost 6 grams per tonne. Some of these intercepts remain open with over 100 metres in drill spacing in between the lines that we've drilled here. In fact, some of the intercepts have been recorded on the ends of drill lines where the lines corresponding to the north and south have not been tested. So part of the thing that we're looking forward to seeing here is not only the lithium potential from the pegmatites, but also the definition of a small-scale JORC resource amongst these shallow gold results that we've had. Looking forward to that project commencing and look forward to keeping the market informed of developments in the coming weeks and months ahead. In a snapshot, this is a news flow that our investors should be looking forward to receiving in the coming weeks and months ahead. We still have those drill results outstanding from the Mount Isa East joint venture. I anticipate they'll be available in the next 1 to 2 weeks. We will have that program commencing in Western Australia over the next week or so, followed closely there by a drilling program in Mount Isa, predominantly on our joint venture program there with Sumitomo Metal Mining. We'll get to our own exploration 100% activities in Mount Isa in mid-March. The likes of Hardway, Mascot, South Hope will be reinvigorated with new drilling, looking there to extend those targets and target new high-grade discoveries. And then last but not least, our program at Bullrush we expect to commence in around May this year. And I will stop there and hand back to Nicholas, who can take some of the questions that we've received, and hopefully I can give some answers.
Thanks very much, Dan. Appreciate the presentation. That was a great run through. I might just start with one that you actually prompted in your presentation, because it's a question that a few people have asked me. So why isn't Hammer drilling on the boundary of that Mount Hope lease? You're right next to the Carnaby discovery, which is obviously one of the more interesting discoveries in the market at the moment. It attracted a fair bit of attention last year. Surely there's a chance that mineralisation might extend across your boundary.
Yeah, it is a question that I get asked quite regularly, and it's an interesting one. When we look at the mineralisation that Carnaby is defined, it commences on surface less than 40 metres away from the edge of the boundary, and it does appear to have a plunge to the south and towards Hammer's tenure. Again, it also appears to extend towards our western edge of our tenure at the central deposit, and Mount Hope North, it certainly appears to head towards the northern edge of our deposit. Certainly around the southern edge, where we're looking at extending potentially into our ground, it appears to be at a depth of greater than 700, 800 metres, so it's quite a way down there. Drilling to that depth is quite extensive, and should we find mineralisation at that depth, it would be hard to justify developing our own underground mine at that depth. So we certainly watch the announcements by our neighbour and keep a close eye on how that looks, and we always consider those prospects from a dual perspective. There are some structures that come through on a shallow depth that immediately abut the ground next to that boundary. One of the particular problems that we have in accessing the small Mount Hope South project area, which commences on the lease boundary, is getting an adequate drill position in there to test across the width of that particular prospect. So in between that, the small workings and the small pit, there's a pit there that runs approximately 10 metres wide by about 50 metres in strike extent.
we probably only have a buffer of 10 to 15 metres away from the tenement boundary to get a drill rig in there and start testing that at shallow depths. And then again, by the time we'd get through 70, 80 metres of drilling, we'd almost be back across the tenement boundary. Topography in that particular spot is a little bit difficult. When we sit back and assess the size potential of the immediate mineralisation at a shallow depth there with some of our other targets, such as Mount Hope South, just 600 metres away, we've made a decision that we have much better prospectivity at the other prospects at a shallower depth, which we think offers our shareholders greater returns. The potential certainly remains there. If you're operating the Mount Hope mine at a significant depth, I think the opportunity to extend that mineralisation across the boundary and have discoveries certainly exists, and I think would be quite valuable to a future mining operation there. We also think about the potential development of those prospects over a longer term. So the prospect of putting in a mining pit on the tenement boundary has a number of issues with it. I think we sit in a very strong position with the mineralisation sitting so close to the boundary. When Carnaby are assessing their development options, I think they'll need to consider how they will effectively mine that, being so close. And I think it's an aspect that we're quite comfortable with our position and our holding in the area, that there is some significant value to be driven through these projects, that we stand in a good stead to share in that value at some point in the future.
Interesting. Thanks, Dan. Just a reminder to everyone listening, please fire in your questions on the Q&A tab. We'll get to those in a second, but I might just give you one other email question that I received, because it's a sort of a related question. Hammer drills lots of different targets, and your strategy sometimes appears to be quite scattered. Why don't you just focus on drilling one area?
That's a great question, and it's one that we often sit back and look. If I rewind a couple of years prior to the Mount Hope and the Nil Desperandum and the Lady Fanny discoveries to the south of the portfolio, our approach very much focused on the position between Kelman and the highway. So that was a stretch that we thought made a lot of logical sense. We obviously are not immune to seeing what is happening around the region and what is being successful. And we've made a very deliberate move to test some of our targets towards the southern end of our portfolio, given the success of these deposits in that area. In terms of being scattered, geology isn't a straightforward exercise. There's always new information, always new data. And because we've got such a large package, we have the ability to swap between targets. I do receive the odd email from people that are bemused between us jumping between targets. I wouldn't say we jump between targets. If I have a look at our overlander drilling last month, we drilled holes number 37 and 38 at that particular target. I'd remind viewers that mineral discoveries can come many multiples of holes. I think Nil Desperandum, the holes, hole 13 or hole 14 that came there for that ultimate discovery and success. Osborne had 58 drill holes at it before that was actually discovered in a mine. Overlander as a system is 4.5 kilometres long. We've got drill intersections there of more than 100 metres at 1% copper. That is a tremendous mineralised system, but the geology is complicated, it's complex, and we live and learn and breathe these particular systems. When we get new information, we act upon them, we go and drill those holes. Those particular drill holes at Overlander don't look all that special. Mind you, they're 100 metres at 0.2%, and the hole was drilled behind it was another 90 metres at 0.2%. So it's got an effective width of nearly 200 metres at 0.2% copper. It is a big copper system, and these big copper systems can take time to find the high grade, highly valuable economic parts of them. I draw attention to some of the early success we had at Ajax. I think the initial discovery there was 11 metres at 5%. We followed that up with about 15 to 20 drill holes along that trend. We've given it a good shot, and there's still plenty of room in between those drill holes to fit a Mount Collins style system. So that deposit in particular has probably produced, the economics of a $100 to $150 million present value. When you consider that there's multiple parts along the Ajax trend that could hold one of those deposits, you'd be remiss if you weren't going back there and exploring those systems. In saying that, we do realise we operate in a capitally constrained world. We don't have all the funds that we need to explore all of the systems in a way that
maybe a Sandfire or an Oz Minerals may have explored these systems. So we'd like to think that we effectively target these project areas in a responsible manner, ultimately in a way that delivers the best chances of success. And you see that last year with our drilling at Mascot, Hardway and South Hope, 3 new systems, 3 new discoveries, all of them valuable in their own right. And we'll continue to explore those, and we'll continue to pursue the multiple targets that we have in the Mount Isa region, leaving no stone unturned to make that ultimate discovery and drive that ultimate share price success.
Thanks, Dan. We're going to take an online question. Just to remind us, everyone, fire your questions in. Dan is a great sport and he doesn't mind taking questions in whatever shape or form. So I'm going to put this next one. This is an investor says that the discoveries that you've made don't seem to be moving the needle as far as the share price is concerned. Indeed, the share price can only be described as appalling. Well, you probably know orphan there. What is the plan to improve this situation, especially considering that any cap raise at these levels would very seriously dilute shareholder value?
It is a question that I'm faced with every day. One of the things that I will remind our shareholders is since 2019, late 2019, when I joined the company, our directors have contributed $2 million in capital towards the company. It's pretty rare that you have a board that's as active and that serious about making discoveries as we are. So in terms of the pain that I can detect in that question, we feel it as much as anyone, if not more. The second part of it, making discoveries isn't straightforward and isn't easy. And you're right, the results that we put out last year, I don't think were matched with the same enthusiasm for discoveries elsewhere. It's quite interesting. When we pivoted from the WA projects back to Mount Isa in 2020, it was on the back of 2 intersections at Trafalgar. Those 2 intersections at Trafalgar were 55 metres at 1% copper plus a bit of gold, and I think the other one was 60 metres at 1% plus some gold. And we went from a share price from 3 cents to 8.2 or 8.4 cents on the day. It gained tremendous attention in the market, and it really put us back on the map in Queensland from a copper and gold perspective. In fact, a third of the register changed on that one particular day. I look at the drill results we put out last year. The drill results at Mascot exceed those drill results that we put out at Trafalgar that particular day. The drill results that we put out at Mascot and South Hope should be viewed in a similar manner to Trafalgar. I think, each of them on their own right, yet we managed to deliver 3 in 2023. There is an element of the markets and copper price being a little depressed and the enthusiasm not being around the markets for them. Ultimately, we need these systems to deliver slightly better grade than what we've seen. It's not to say they're not economic or not valuable. I think, our goal is to make intersections of 40 to 50 metres at 2 to 3% copper, find some high grade, near surface mineralisation that can ultimately result in a re-rate of the share price, enable us to raise the capital to take Kelman and the neighbouring projects through a project development. And if we can manage to do that and not dilute shareholders to a significant extent in the process, that is our aim. In terms of our immediate aims around capital, it is a fair question. It is a question. Again, I'll point you towards a position that we found ourselves in last February at the news flow that we delivered with a $2 million cash in the bank amount, and we're looking to do the same again this year. In terms of my tenure since we've been here, in addition to the funds that we've received from the directors, we've brought in, by my calculations, about $11 million in alternate funding into the company since 2019, be that through R&D tax refunds, CEI drilling grants, the joint venture with Sumitomo Metal Mining. We have always found alternate ways to advance our projects and our fortunes in the company without unnecessarily diluting our current shareholders through capital raises. Can we avoid capital raises? Certainly not. We are an exploration company and that is part of the cycle. The key is raising capital at a fair price when we are being successful and when we do have good news. And that's our focus, delivering good news, good drill hits, and continuing on this journey.
Thanks, Dan. Look, while we're on the subject, we may as well sort of hit it on the head. It's a common question at the junior end at the moment. Another investor has asked that given your cash position at the end of the December quarterly as reported, when will you be raising capital?
I would point to the additional $400,000 that we expect, that we will receive for the drilling that we completed on behalf of the joint venture. The R&D tax refund will come in. We'll continue the drilling program in Mount Isa coming up in March. It's funded by the Sumitomo Metal Mining work. At the moment, at 3.5, slightly north of their cents, a capital raise isn't something that we find highly attractive at all. So we'll continue to deliver with the funds that we have and assess the markets as we always do at any point in time.
Thanks, Dan. Let's chat a bit more about Kalman. It's an interesting project, been around for a while. It's a substantial project and clearly a cornerstone asset of the company's. When realistically could Kalman become a mine, and what steps would need to be taken to sort of start that process? You did touch on, I guess, the cost in your presentation to move it through feasibility.
Yeah, the hold up is the capital constraint for the project at Kalman. I think when we assess what the pathway looks forward to, we've been completing as many of the lower cost activities as we can in the background. So the resource upgrade, there was some drilling associated with that. The most significant cost in going through the feasibility study is the increased drilling that's required to get the resource to a satisfactory level to enable the confidence to report out the economics around it. The second part of it is refreshing the metallurgy. I think there's been tremendous improvements in metallurgy, and I think the metallurgical work that was done at Kalman a while back can be dramatically improved. So that's another element of work we'd like to do. With the capital at hand, I have confidence that you could see some pre-feasibility style reports out of the project in a 12-month period, slightly longer to go through a full permitting process, 2 to 3 years, with construction thereafter. The key is ensuring that we have access to adequate capital to do that work without diluting our existing shareholders. One of the things that we always think about as a company is whether or not we would JV out the Kalman project. When you're looking at, let's say, $10 million where we currently sit, you'd effectively, by diluting everyone by 25 to 30% to achieve a study on that project. Anyone coming in to look at a joint venture probably wants that plus some more to take you through that JV work. We're always open to that idea, and we always think about that potential to move the project along. Our view is that making a discovery, getting the share price up, and then raising enough money to do the work ensures that we maximise the value out of what I've already demonstrated, I think, is an undervalued existing resource.
Our conversations just prompted a question that's popped up there, Dan. Would Hammer build and operate Kalman if the deposit was economically viable, as Sandfire did? So I guess that's hinting at, would you do it yourself, or would you JV it or bring in a strategic partner?
I'd love to build it ourselves. One of the reasons that I joined Hammer, was a romance, and I missed out on it. Sandfire, I joined Sandfire well into their journey from junior through to, international, couple of 100,000 tonne copper per annum. I missed the journey there at the start, and it was one of the things that I could always proudly walk around and talk about when I worked at Sandfire. So the plan at Hammer certainly has been to get to a position where we can build Kalman ourselves and operate it. There are a number of nearby opportunities that an operation such as Kalman would unlock. The whole dynamic around the Mount Isa concentrated closing is a fascinating one at the moment. There becomes effectively stranded deposits in the region. So if there's stranded deposits in the region, how are you going to bring them online if there isn't a concentrator for them to use? Building a concentrator at Kalman makes a lot of sense because you have the base load level of material there. You have that 30 million tonnes at 1%, north of 1%, for 10 years of production to produce that 30,000 tonnes. If you build something like that, the associated deposits in the area that are stranded can be developed through a central processing facility. The world's highest grade molybdenum mines, molybdenum deposit is 85 kilometres to the southeast. That is a fascinating deposit. It's super high grade. It's the equivalent of a 5% plus copper ore body. That sits there undeveloped. There's been some newspaper articles suggesting those assets are for sale. I think the combination of something like that with Kelman would make a fantastic dream operation. And other types of things that I think would be available to a company that would develop the Kelman project, because you have that baseload level of mineralisation there. And that is my ultimate goal with Hammer, is to get a development up at Kelman and bring in nearby feed and have a long life operation that would be highly desirable to many global mining companies.
Related question here, Dan, from an investor. Tell us, what does the addition of molybdenum to the critical minerals list actually mean in practice, and will it help to move the project forward?
I think undoubtedly it does. Yeah, at the very least, I think we'd see funding available for a project like that through maybe the Northern Australian Infrastructure Fund. I think that brings in, one half of the equation in building an operation, which is the debt funding of it. There would obviously be an equity component, but I think the level of interest around a project such as Kelman being ultra high grade molybdenum, with the addition of copper, unlocking a region that currently has some uncertainty around future jobs, I think would be highly attractive to both state and federal support in moving those projects along. And whether that support comes in the form that we currently see through the Queensland government of reduced exploration, permit fees, through to unlocking infrastructure such as the Copper String project through to Mount Isa, and we see some of the funding around some of the rare earth projects. I think being added to that list and having one of the more viable or more prospective projects in Australia, in fact in the globe, I think draws the attention on projects such as Kelman, and we're having very initial discussions to see what additional assistance might be available to get Kelman moving forward.
Thanks, Dan. I might just finish with a couple from myself, and also give people a final opportunity to lob any questions in while we sort of start to wrap up. Just given your experience in the copper space and the industry and the market, what's your take, Dan, just on the outlook for the copper market? I mean, we read a lot about deficits emerging this year. We see stockpiles at all-time lows. There's a lot of, I suppose, longer-term hype about copper, but at the moment, clearly not reflected in sentiment, certainly, and probably not in the price either. So, what's your take on it, on that whole thematic, and when do you think we'll see a turn in sentiment start to occur?
I do my best, Nicholas, to avoid discussing the futures of a market that, to be frank, we're price takers, not price setters. It does have an interest in, my view of the copper price, and there was some excitement 18 months ago around copper exploration, copper development, and we saw prices run north of $10,000 a tonne. My view at the time always was that I thought that would be a short-lived scenario, purely on the back of it. It came on the back of supply disruption through South America. In terms of what we see going forward, that supply is effectively caught back up, and we saw the prices come off. Again, as we've seen significant supply disruption, again through Panama, the closure of some mines in South America, and local permitting and operational issues. We've seen inventories drop through China. We've seen, we see people like Robert Friedland making some pretty big suggestions as to where the copper price is headed, and I have no doubt that stronger copper prices are around the corner. In terms of a fundamental shift in copper demand and supply, we're not making new discoveries. New mines aren't being built at the current copper price. Many copper producers are breaking even at the moment. So where's the incentive for new mines to be built in what is, an environment where we've seen an inflation of costs? The copper prices must increase. As we see the transition to a greener, cleaner environment, more electric vehicles being adopted, the establishment of those networks to charge those vehicles, the demand on copper is going to explode. And I think what we will see, we've seen what happens when supply is constrained. What we'll see when demand comes for copper, we will see a magnified response in copper price. How far away is that? I always hope it's just around the corner. I think we'll see some stronger copper prices this year on the back of supply disruption. I think we'll see fundamental changes in the copper industry in 2 to 3 years' time.
the best time to buy assets is when they're undervalued and underloved, and I feel the copper sector at the moment is underloved. If I had a large checkbook like I did when we were looking for opportunities at Sandfire, now is a perfect time to go around looking to consolidate projects, bring in new jurisdictions, bring in new opportunities, and I think that offers investors a bright light on the horizon of what has been a pretty tough time.
Good summary. Thanks, Dan. And just a final quick one to finish on, because I think your first drilling program this year kicks off very soon at the Yandal project in WA. Really interesting area. You're in the shadow of some of the biggest gold deposits in WA, but also obviously very close to the Kathleen Valley lithium deposit. So that's going to be a fascinating program. Can you just give us a quick couple of points to take away on that program, what you're doing and what you're hoping to see from it?
Yeah, so the lithium is going to be an initial test of the other side of a fertile granite unit. Geochemically, the team's really excited by what they've seen at that prospect. We're really looking to see what those pegmatites can deliver under the cover there. We've got no idea. We've got very limited sampling completed, so that is a wild card. And I know lithium's been beaten up over the last couple of months. I still think there's a reward out there for greenfield lithium discoveries. So I'm really looking forward to that program. And the gold in the Yandal belt is unfinished business. I mentioned before about that Trafalgar drill hit, that tremendous sentiment change in our stock price and our interest in Queensland. I wouldn't say we stopped everything in WA, but the WA gold certainly took a back seat back then. We're excited to be back there. That trend of 2 kilometres worth of gold, it's fascinating, unfinished business, and I'm looking forward to seeing similar results to what we saw last time, which were 4 to 5 metres at 4 to 6 grams per tonne. I think we can expect to see some more of that along that trend, given the proximity to the historical drilling.
Yeah, lithium sentiment might be down, but I don't think anyone would say no to a big lithium discovery over there.
Definitely. I'll take any major discovery, and that's what it all comes back to for us, Nicholas. The team is geologically focused, testing high prospective targets, developing them, testing them, and trying to deliver growth to our shareholders in that way, in a similar format to the team's previous record.
Thanks very much, Dan. Look, great, always great to catch up with you. Thanks for the presentation and for taking the questions, and thank you to everyone for your participation today. A recording of this will be available through the RRS channels. It'll be in our weekly wrap tomorrow. It'll be published on YouTube later today, and of course through all the Hammer social channels and website as well. So thanks for joining us. Really interesting story, a stock to keep a close watch on in the next few weeks. Dan, thanks for your time this morning.
Thanks, Nicholas. A pleasure.
Thanks, everyone. Have a great day.